Good morning, traders. Paul here with GammaEdge. Today is Thursday, the 25th of May. Let's get started. Pause your players here. Read to the very bottom. If you agree, hit that play button. Summary for today, we're right across the board. Short-term market models are both bearish. The 0 DTE and the 1 to 3 day swing, which is really appropriate for our short-term model. Both are below the previous day, continuation day down. What that means effectively is that you shouldn't be increasing your long exposure yet. Of course, the 0 DTE folks watch intraday, and those can turn into 1 to 3 day swings. So every trade starts with a 0 DTE. So we would urge everyone who's playing the short term to watch that and watch the intraday CTs. Long-term model, we are inverting to a long-term bearish condition across the board. Now, these can reverse, but we are weakening across the board. SPX, tick SP looks probably the strongest, and then surprisingly there is some life that is appearing in the Russell 2000 tick, but everything else is still quite bearish, and our benchmark, the ARCX, which is the New York Stock Exchange, the NASDAQ, and then the Amex, all combined into one, is clearly weaker. It's inverting to this long-term downside, and that's going to be a problem. So I just want everyone to realize that even though we may have a short-term rally, a longer-term view here is to the downside. Transitions, we closed at 41.15. The lower transition has dropped in the SPX PM complex to 41.40. The upper transition is 41.75, so this is wider. And the so what here is that when the transition gets wide, it becomes ill-defined. It's difficult to navigate above that because there's a lot of areas where the term that we use is hiding locations for the dealers, but the market has lower gamma and delta exposure within the transition range. This is why there is no central flip number. Mathematically, sure, any of your services out there can generate an exact mathematical, where does gamma flip and all that, but it's not appropriate. There is a range of things that occur, and when you have multiple zeros in the transition, these are all areas for parking. So just be aware of that. Discord users today, we want you to watch the Value SPX P command, and that'll tell you about targeting. If you see targeting above this 41.75 or in the range of 41.40 to 41.75, we do have a chance of maybe a short-term bounce and rally upward. So watch the call structure up there, but of course watch the downside too. Of note, negative gamma exposure has moved up from 3,900 to 4,000. We believe this is positioning for a further decline. Sorry for the typo here. Plus GEX remains at 4,300, but it continues to weaken, in part due to the spot falling and in part just due to calls being closed. In fact, all the complexes, even though we had yesterday as an expiry day, every one of them has increased net delta decrease in overall net deltas on the trader side of the structure, as well as net gamma on the trader side, which means that the dealers were getting longer in both instances, and as a result had to sell, and hence why we saw probably the action we saw yesterday from the open. 0 DTE folks, we have a lot of them in the Discord. We've dropped. So P-Trans is down to 41.25 and N-Trans is at 41.20. Very tight. So this range here is going to be very important as we move forward today and tomorrow. The upper charm strike is 41.20, which is ITM. There's a overhang at this 41.20 strike, and then if we can get above that through targeting, whatever the case may be, then 41.40 becomes the next upside target and could actually pull us upward, and that is an OTM out of the money call dominated strike. So just be aware of that and the dynamics that are going on there. Lower charm strike is 40.80, and this is out of the money put dominated. This will continue to decline today, and then finally will become supportive as the in the money calls at that level will take over later in the afternoon. We think this is going to be supportive unless that 40.80 goes in the money on the put side, in which case we'll probably collapse down to 4,000, but we're not anticipating that today at all. Market model, as I said, we're showing continued weaknesses across the board. We have 3 time scales really indicated here. So the instantaneous or 0 DTE cumulative tick, this white bolded line, you can see had a second day of almost linear down. This is just sustained selling across the board, very, very broad. The next slightly longer time frame is what we call a railroad track pattern. You can see why it had a continuation day down, and is going to remain in that pattern until the white line crosses above it. Which could happen, right? We can bounce at any time, or we could start going horizontal, kind of like what you see over here on the left-hand side of the picture. The thing to pay attention to is that the colorful ribbon in the middle, these are long-term moving averages, and without getting into all the details of how they were constructed, you can see over here on the right-hand side they're starting to roll over. And when that occurs, that'll be confirmation of really decreasing your long exposure and looking at increasing your short exposure. And so we're you can bounce above and below this ribbon. The fact that it's horizontal shows you we've been chop for some time. When a moving average goes flat, that tells you are going above and going below it fairly consistently, and with that consistency of chop, you're going to get chopped. So get shorter in your time frame because there is no trend on the longer term time frames, and play opportunistically. If you're not doing that, come on into the Discord and we can help you think through that. Taking a look at the gamma charts, this is the PM settled complex. We separate the PM and the AMs because they actually trade very, very differently. And one of the key things to realize is that transition right here at 4155, that's the P trans or positive transition. N trans is 4135, and we're below that. And you can see where the overhangs are, where the net gamma is going to be pretty strong for the overall structure. Note the expected move in the upper right-hand corner, 2.43%. This is a conservative open, high, low close. If you're a premium seller, this number is on the rise, so I would actually be a little cautious about selling. I would be more inclined to sell to the upside than I would to the downside at this case. One thing to note, even though we had a fairly good selling day yesterday and whatnot, we're not completely in bear territory. You can see some green in the delta columns. That means the out of the money call speculators to the upside, really above this 40-20 level, are still playing. They're still very relevant. They haven't given up. When we see red across all the way up and down, we know that the puts are controlling the conversation and that the call speculators are not present. That is not the case in the PM settled complex. That means there is still rally potential. So just be aware of that, but it's going to take a lot of work and a lot of repair above us to move higher. 0 DTE, as I said, very well defined here. You can see very clearly where the strikes are. 4120 and 4140 really are the dominant strikes on the call side and the put side. Just be aware of that. 4080 to the downside, and you can see there is a tremendous amount of puts that are set to expire today. They are mostly out of the money right now, and so they will be positive and supportive. If you don't understand charm flow, come on into the Discord and we can help you understand that and visualize that. We have a lot of tools to slice this stuff and help you visualize what's happening. On the 1 DTE, which is tomorrow's expiry, kind of the same thing, 4125, 4150, those are the indicated ranges. You can see that 4125 strike, which is a put-dominated strike right now, is in the money. And with it being in the money, that's going to be an overhead resistance level until it's not. And so watch for targeting, especially at the end of the day. If we get calls being opened up, or if we get any monetization of the puts today, that could actually force us above. So if we go above, say, 4120, 4125 here in the 0 DTE, that could actually cause this to go in the out of the money for tomorrow, which will be supportive and actually could be a scenario where we could rise, up through 4150 and perhaps all the way up through transition up at 4170. Crystal ball view into the balance of the week. So this combines today and tomorrow. You can see very clearly net negative expiry between today and tomorrow. It's very strong, right? So there's a lot of charm flows that are supportive. We're not going to collapse. I can tell you right now, we might move down, but we are not going to collapse. There is a lot of support and a lot of propensity to monetize as we drop through, as a lot of the in the money or out of the money puts become in the money, and so people will take those profits, and that will be supportive to supporting us on the way down. Taking a look into next week, here I turn on all four, this week and the first 2 trading days of next week. Remember, we have a long weekend. You can see the structure is about the same. So here's the balance to the end of month. Here's the balance of the week. You can see the structure as I go back and forth here are showing relatively the same types of things. Now, we do have some changes in the GEX structure and things like that, but the transitions are holding tight, and this is what we watch first and foremost. If the structures are holding tight in terms of transition, you know basically where the lines in the sand are, and you know how behavior will change as you cross those different thresholds. That's the first thing to understand if you're going to try to tackle this thing called gamma or delta or charm and things related to it. Taking a look at the combo complex, this is where we turn everything on. This is the AM and the PMs all combined into one big cauldron. Again, to the upside up here in the net deltas, you see some greens up there. Those are out of the money call speculators. They have not given up, right? So remember, deep in the money puts exist up here. In fact, you can look over in the put OI column and you can see there's a lot of them up there, but there's more out of the money calls, and they're shorter dated, etc. So they have that influence of being net positive. As we come down closer to the yellow line, which is the current spot price, you can see we then flip to a dominant in the money put structure in the deltas. And what that means is that the out of the money call speculators for the short term above us have given up and basically are not able to dominate those in the money put structures. This is going to be very, very difficult to move up. We're going to need to see calls, out of the money calls, target these areas about 41.15 in order to move up. It's that simple. It really is that simple. Let's not make it too confusing here. And right now the structure is not supportive to a rapid run up. So we might push up towards transition, which remember was up here towards this 41.70 level, but we're going to have to see a lot of calls open up as we go north. To the downside, you can see if you look at this carefully, right? There are some strikes which do have out of the money puts. Those are red, but the majority of them are in the money calls. So even in the mothership, the SPX Combo Complex, we are not seeing a huge panic and run for the exits, right? So we are seeing some opportunistic out of the money puts below us. No question about that. But it is not an immediate, fire sale here. And so what's happening here is that we are transitioning. There's no question, but we're right at this kind of balance point where it can go either way. If we get the out of the money call speculators returning, there is a chance we could move north. There's no question about it. To the south, if we get out of the money put speculators continue to add to the downside, if they feel emboldened, if a budget deal isn't made or whatever the case may be, if Nvidia is just a flash in a pan, it doesn't matter what. If the out of the money put speculators continue to add to the downside, then we'll start seeing the erosion and a path develop down below us. But right now, when you take a look at where we stopped and look at that delta level there, it's almost zero. I mean, 87 million is nothing in the context of the SPX. So when we look at an 87 net delta here, 87 million net delta, that's virtually zero. And this is why one of the reasons we believe we park at these different areas. And as we move down, monies will change, et cetera, and that'll have a big impact of what happens here. It's worth noting that up here in the upper right-hand corner, 947 million in the net gamma dollars here. Why that's important here is that even though we had an expiry yesterday, this number jumped a dramatic amount. So we're seeing a tremendous amount of short-dated puts go into the overall structure. We're also seeing, a lack of short-dated calls go in, maybe a little bit longer-dated calls, but over, the time frames that we're looking at, we're seeing short-term bearish, although the structure is still weekly bullish, as indicated. And final chart here, what we call the landscape chart. Plus GEX, the right goalpost, still 4,300, hasn't changed, although the magnitude has dropped. Part of that is because price dropped yesterday. Part of it is because we're just starting to see calls get closed. To the downside, 4,000 has moved up as the left goalpost from negative GEX. We feel this is short-term positioning. As price moves down, the deltas here will change. From an out of the money to, if we get all the way down to 4,000, obviously at the money and then in the money. So this will be accretive to those folks who are opening those long puts that are down here. Note though, the structure is very well protected to the downside. You can see all the puts relative to all the calls. we're not going to collapse, and that's our best guesstimate of what's going on right now, and we think just play it accordingly. I want to draw your eye to the middle of this before we conclude. Transition's broken. There's no other way to describe this. When you have multiple nodes like this, you have what are called zeros that develop within the gamma structure, and those are nice hiding places where your gamma, where the dealer gamma is going to be very, very small. Their exposure is low to gamma, and frankly, it's a hiding place. It's a very easy place. There's an equivalent picture like this for delta, and you can actually see those zeros also. You can see them in the chart here, where the zeros start appearing. And every place you go from a green to a red, there's a zero that lies between there. So, the takeaway for everyone here is that transition's fat, it's wide, it's loose, there's a lot of hiding zone, we've got a lot of noise going on here, and we're going to see more of the same. It's that simple. So don't overthink it. Play your short time frames. There is no trend. Not right now, there isn't. It's horizontal. So shorten your time frames and get smaller. Don't get out over the tips of your skis. And, our bias is to the downside. So with that, I will leave you. If you have any questions, comments, want to come and kick the tires, go to GammaEdge.us, the upper right-hand corner. Click the pricing tab. Come on in. 14-day free trial, all the tools turned on, great group of traders, active in Voice. Make sure you join Voice and post your questions. There's a lot to learn here, and we think we give you a lot of tools to visualize stuff. Follow us on Twitter at GammaEdges with an S, and here on YouTube, of course, 2 things. Subscribe so you get notified when we post videos, and 2, hit that like button if you like today's commentary, so that tells me immediately that I'm providing the content that you find actionable. So with that, I bid you farewell. Hope you have a great day, and hope to see you in the Discord. Thanks, everyone.